So today we know we have a show about savings and budgeting. Like basically, we're gonna have that conversation centered around that. We're gonna debunk the myth of a budget, really, and from what I want to do, and I want to make sure that by the end of the episode, anybody who's listening, who's tuning in, knows what a budget is and how simple it is, and it's not just a scary word. Because when we hear budget, like, oh, you're gonna ask me for too much. I have so many things to do. I don't want to do that. So I want everybody to that listens or is part of this show today to just like debunk the myth that is budget.
Definitely. What we want to make sure is that people understand that we are not going to do presentation. We have data, we have real life scenarios, and ourselves specifically, people that we've been around, what they've been through, and how we can use all of that. Today's show is going to be a very clear step by step framework to create
Step
your
one.
first or best budget and a plan that that you can actually start and that actually work. We don't want to simply throw out methods that maybe don't relate to you, but we want to say things that we actually know that that all of you guys are going to use. And if you find maybe that topic is interesting to you, go ahead, share that with your friends or the people in your community that you think might be interested about that topic. And also, it's a conversation. We will be able to see your questions, interact, and answer your questions, and find the best way to make sure that what we're doing is personal to each and one of you who are watching the show, not just something that we are doing an expose or presentation on. But then, for that to be possible, you guys will need to collaborate or cooperate to make it
We need you guys.
possible, right? Because the show is for you guys. And yes, we love having those conversations, but the show is also for you.
By the way, very interesting at the bottom before we jump in that's the actual numbers for the stock market. So just I wanted to point that out because
Is it
even
me? Is
for
it me
me,
or everything is red?
Mm,
no, there are a couple of green stocks.
But yeah, like at the bottom, there's some very key stocks and
hey,
what they're doing. It's life.
hey, if we're talking about finance, we don't want you to leave the show to go check how the financial market is doing.
You got a visual right here.
You have all those data right there. And if you're a fan of the show, you always hear every weekend or every week, and you do have some tickers, some stocks that you want to be able to track live on the show. Feel free to let us know so I can adjust them and have them ready for you so you can follow with us, guys. Right? All right, let's go ahead
Yeah,
and take it away. And I will make sure to monitor the chats and take the questions if you guys have questions as well.
Man.
sounds good.
So why do you guys think budgeting matters really? Like if I say, okay, I'm going to build a budget, why would I need to build a budget? It's just like a general question thrown out, because we're talking about savings. So why is a budget important in your opinion?
I mean, a budget like we know. I mean, we're in the financial industry, so we would know more. But I feel like anyone that takes their finance serious should at least have a budget, and I'm very strong on that because a budget is basically a roadmap, a blueprint to where your money is going. So there are different ways. There are different type of budgets that exist. One of the easiest budget to model is the Elizabeth Warren budget that she presented in her book. I don't have the name of the book right now, but she did write a book with her daughter about finance, and she presented the 50-20-30 rule. 50% for your needs, 30% for your wants, and 20% for your savings. So that is an easy budget model to follow. So 50% of your income, and that would be your net income, which would be the income that you bring home after you pay tax. So recommendations based on Elizabeth Warren's model, that would be 50% of that would go towards rent, towards utility, would go towards any basic needs that you need. So if we take the average medium price, not price, I'm sorry, average medium salary of a household in the United States, which is about $3,500 a month. So if we go based off those numbers, 50% of that need would be about $1,750 that would go towards rent, and all the other utilities. About 1,050 would go towards your wants. Wants would be anything that is not necessary, but that you feel like you could need for the month, like subscriptions, eating out, um, going shopping, anything that you want to treat yourself during the month is completely fine to have wants, and 20% towards your savings. Savings that will be retirement, that will be emergency fund, that will be investing. So you have all of that towards savings. So about $700 based on the medium income in the United States. So how that would look like, the suggestions here is to pay yourself first. So once the net income gets into your bank account, the first thing to do is to go and put the money into your retirement, into your savings. So get that 20% out of the way, put it in there to make sure you pay yourself first. Because at the end of the day, your savings, the retirement is your future. You're investing in yourself in the future. So before you pay rent, before you pay any debt that you may have, pay yourself first. And then after that, you'll go ahead and tackle the other necessary expenses that are that you need for the month. So, and there are the different budgeting method that you could use. There's the $0, where you make sure every dollar goes has a purpose, is taking care of something. So budgeting, like we said, it's a roadmap to your finances, which I think is very important for anyone that takes their finance serious to be able to follow and know how to use. So very important skill to have here.
I like that you said the $0. So when you say $0, I don't know for you guys, but what I'm picturing in my mind is like, when you have a nonprofit, and at the end of the day, like you need to balance your books, and they have to be zero. So that's what comes to mind. But I'm glad that you went into the 50, 30, 20. I want to remind everybody that we're not financial advisors. Um, so the 50, 30, 20 is just a suggestion. It's one of the generally agreed upon method that for a healthy lifestyle, really, financial lifestyle, if we're thinking about it. So 50 covers exactly, um, 50 covers exactly like necessities, and then 20% is like saving, is just paying yourself. When we say pay yourself, I feel like people struggle with that part. Um, I'm sorry. That I
You good?
Yeah, I had a problem with my mic. You good? You guys can hear me?
Yes, we hear you.
All right. So the pay yourself part is the part where people usually are confused about, really. So 20%, what we save, really, it goes to your saving accounts and other saving methods that you have. It's for further down the line. It funds your life after working, because you don't want to spend your whole life working. You're saving for a reason, either to fund your lifestyle after retirement, or you want to leave something for your kids, really. So that's why
One
you
thing I
save.
want to
What's that?
emphasize. Oh,
Oh, no, no.
sorry. I'm
That's
sorry.
why you save, and that's why you usually pay yourself first, the 20%. Now the 30%. One thing is like, as people, we need entertainment. Um, it's not something that we can live with. Like, we can live without it, but it's something that we want. So we should not minimize the wanting part of things, because why have money if you can't spend it? And to a certain degree, of course, why have money if you can't spend it? If I want, I just might want to, I don't know, go see a new movie. This April coming, I think the end of the month, there's the Michael Jackson movie coming out. I would love to go see that. So I don't know about you guys, but I know what I'm gonna do with my 30%.
Okay. So I wanted, because I felt like we got so fast. So before even going to another budget system, if we wanted to focus on the 50, 20, 50, 30, and 20 system, which is the easiest system. If you're a beginner, we have to point that out. If you're a beginner, you can't manage your money, you've been having budget issues, that's the easiest way to be able to manage your budget. Because just to be clear about that, 50% goes to the essentials. Essentials, it can be rent, transportation, anything essential to your living. Okay? Then we go to the 30. But the 30, the wants is nothing that exaggerated wants. But we do know that you need leisure, you need your personal time. So those can be a dinner from time to time. Those can be vacation. Those can be fixed in different way. So and then the 20%, which is more important, even if it's 20%, because it helps you to pay debt, and as well it helps you to be focused on savings, the proper savings. So I wanted to point out, so the fact that you have a budget, that doesn't mean that you cannot have a good time, because when you have a proper budget, you don't feel guilty about spending. Because a lot of people, when they earn their paycheck after taxes, after everything, sometimes they want to do an expense that they always wanted, because you worked hard for the money and you want to spend it accordingly. So the only way for you to spend it accordingly is to be able to track every single dollar for that budget. So that's what I wanted to point out before we even move to other system of budgeting.
One thing I want to put in real quick. So I know we're talking about the 50-20-30 system here, and I don't want anyone to get caught up in the numbers and be super rigid with it, because we do understand life happen and nothing is perfect. So there's no way that you will have your income in exactly 50% of your income is your utilities. Like there's probably gonna be a little bit more. It probably will spill over a little bit more. So it could happen that paying your rent, paying groceries, and paying anything else that you deem necessary for the month can spill over 50%. That's completely fine. That's completely normal. So what you need to do if that happens, that means that you're probably living above your means. That means probably your lifestyle is a little bit too expensive. So cut back on the
You
lifestyle
don't
a
need
little
to go
bit.
to the
There's
club
a
every
couple
weekend.
ways. I mean, there's a couple ways you can fix that. Is to either spend less. A great since the beginning of time, how people always trying to find a way to spend less is always to move to a different place. I mean, if we do a quick little history lesson here, there was famine in the UK, famine in Ireland, famine in England, so they moved into the United States cheaper. Even in the United States, the story of the United States when they were conquering the West. So it was always people moving for financial means. So if you're living in a city, let's say you live in New York City, we have a couple people here that I know that lives in New York City, or you live in Miami, whatever big city you live in,
Green
and
shades right now.
your rent and your car note and everything is above that 50% line, probably try to think. I know it's not as easy as it sounds, but just start thinking maybe moving somewhere where, or you could try to make more money. That's another way you
We
could go
should
about
clip
it.
that. If you live in New York or Miami, think about moving. Basically.
No, I
Basically.
wouldn't recommend that really.
No, but
But yeah,
Fabrice said it's interesting that he went into that specific
that's
angle.
a good point. That yes.
No, no, I said it was good that he went into that specific point because if I recall the first slide that one of the first slide that Jonathan had is that 57% of Americans can't cover $1,000 expense, which is wild when you think about it. Because I know you like your little maps, Fabrice. Do you know around what number of like how many people live in the U.S.?
Yeah, about 360,000, 360 million, I mean, or
Okay,
390 million, roughly
I
around
was
that.
so confused. Like, huh? So we got like more than 150 million people. Like, if tomorrow, no, well, I don't want to say tonight, but let's say tomorrow, they
It's
need
basically
to,
almost two
yeah,
third of
yeah,
the. I
like
mean,
$1,000, and you can't cover that. So one of the reasons why this happened is because you don't have a budget set up. So yeah, the 50/30/20 is nice, but when you think about it, the reason why we can't cover um, unforeseen, I would say, expenses is because we don't budget our life. Like there's no structure to it, and it's pretty simple. It's a pretty simple fix. Not simple in the fact that um, we can all do it, but it's just like you have to know how, and you have to have the will to do it, if I may say so. So like yeah, you don't want to have a problem tomorrow and like, oh, you I can't cover it. That's gonna put you in more trouble than most. So
I'm pretty sure a lot
One
of
more thing
people.
I would like to add on the numbers since we're talking numbers.
mm,
Yeah, like you said, Eva, it's very, very staggering number that 57% of American citizens are not able to cover $1,000 emergency. A crazier number that we have here. I don't know if Jonathan will be able to put it on the screen here. About 35% of American citizens don't even have a savings account. So they don't even have a savings at
what's
all. They're
that?
at zero. So insane to me.
And a crazier number since we are doing crazy all over the place. So in terms of debt, the average American has $6,500 dollars of debt.
So six
Just
thousand
the
five
average
hundred
American
$6,500 in debt.
of credit card debt, not even student loan and all those good things. Yeah. So thank you, Jonathan. So
So,
yeah,
people might feel like this topic is kind of redundant, and that's something they hear all the time, and they feel tired about hearing it. And it's not for no reason that we choose to uh, have that conversation, because, as we already said, 57% of Americans don't have $1,000 saved in their emergency account. So out of two people that you meet on the street, one of them only have a savings account. So that's how it is. And you might even find two people and none of them have a savings account or have $1,000 in their savings account. And there are multiple reasons why. And the reasons are most likely why we want to have this show, to explain what people can actually do, and questions that you often don't be asking yourself, because oftentimes we just found ourselves in those situations. I can Fabrice already elaborate on that, but I can go a little deeper, because we have to remember we ourselves are immigrants. I'm pretty sure, I don't want to speculate where we currently live, but I'm pretty sure where any of you guys are right now, it mostly because some parents, some families who who we came to the states before you, they were living in that area. So most likely, the next auntie or uncle or cousin might move to that state as well, because as immigrants, we want to support each other because that's all we have, and that's how we found ourselves in those situations, because immigrants mostly lives in states or cities that are very expensive, and there are many reasons why. One of them is accommodations, is work, and the type of labor that they can do, and where there are demands for those laborers, and that's why we found ourselves in those cities. For example, we know that large population of immigrants in New York and Florida, Miami, in Boston, and those cities where they have a lot of immigrants population. Those are the reasons why, because they need transportation. The transportation system that is in Boston, you're not going to find it in in any regular city. And if they don't have a car, they need to be able to move around. They need those infrastructures, and that's why they end up moving to those places. And the example that we gave earlier is kind of funny to me, because let's say we say in the example it says for all your needs you spend about 1750. That means your rent is 1200. If we're being realistic, guys, like how many of you, unless you have a roommate or you're not renting your own apartment, you renting a room, you might find something for that cheap. But if you're renting in one of those cities, I'm pretty sure it's going to be way
Pretty sure the rent is not 1,200.
way higher than that, right? It's going to be way higher than that. And when you have rent, if you do have a car, the insurance is going to be higher than that. If you have a car note, the fact that you have a brand new car and you live in a very busy city, your insurance is going to be high. Your interest on your car note is going to be high. Your percentage, you more likely to get into an accident in those cities. So that's why everything is just against you and you don't even know that. So if you don't take your time to budget, that's why you get lost. Because budgeting is like your financial GPS. And without it, you will get lost. If you don't have a budget, you don't know where you're going. And I'm pretty sure, especially if you're living in those cities that I just mentioned, you definitely need Google Map so you don't get lost around. So the same way you definitely need a financial GPS, you need a budget to know what you're spending. And we have, I think, one of the resources said 65% of Americans don't know what they spent last month. People don't even know how much they spent, but they do want to know how much they gain. What is their income? How much they're getting paid every week or bi-weekly? But they don't know how much they are spending because they don't budget. They just end up spending. So that's one of the first part we wanted to mention, that why is budgeting important? It's because that's what's going to help you to get around your finances, your bills, to know can you actually afford what you want, because we all have wants, right?
Yep.
We all have
Can you?
wants, but can we
Yes.
actually afford them? Are they really necessary? And all that. And if you don't do a budget, you will end up paying for things that you might not even really want and might not even able to afford.
Yeah.
And
Yeah.
Jonathan, I did like that intervention. So, but I wanted it to be realistic a bit. So, because I'm glad you mentioned all those metropolitan areas, which were Boston, New York, Miami. But just a question for you guys. How much do you think is enough to get around? Like to live, not even comfortably, just to live, let's say to have a certain stability.
I think that's a
If I
tricky
mean
question
before,
because we're all different.
No,
We're
like
gonna have
in all of those
I think
metropolitan areas.
yeah, before I get into that question, I just wanted to say that, and then I'll answer your question here, Val. So, I mean, just like you were saying, I'm pretty glad Jonathan made that point. Hence, the reason I wanted to come back to my point here previously of where, if you're living above the 50% means, like if your bills are more than 50%, maybe you should reconsider where you're currently living, or where exactly your money is going, or how you're spending your money. So that's why living in those cities, I know they're beautiful. I love Miami, love going to Miami, I love going to New York. They're a very nice city. You have a lot of fun there. But living there is a little
is
bit
that so?
different. So if the American income, the median income is 3,500 a month, if you're making 3,500 a month in those cities, I'm sorry to tell you, it's not good enough. It's not good enough. 3,500 a month in Miami, I don't believe that it's good enough. It's not gonna have you. You might be saying yes, I live in Miami, but just like we were talking about, is $1,200. If $1,200 a month for rent, is that really gonna get you a nice spot in Miami?
Is it
Is it
worth
really
it?
going to?
Yeah. And if you
No, I mean,
3,500 is after tax. For you
guys,
Yeah,
to be
after
able to
guys,
make
taxes.
3,500, then you need at
guys,
least
that's exactly, you guys are
47.
taking me where I was supposed to take you guys. So that's
We
why
ahead
I
of
asked
you.
the question first. So
Yeah.
I mean it's fine. So what's the appropriate amount?
I
Those
mean,
metropolitan cities
how I would say. I mean, I don't know what's the. I don't
before
know
taxes.
if one of you can Google real quick. Let's take Miami for real quick. What's the median rent price in
I
Miami
think
from the
no,
top
I
of
don't know
my
for the
head?
No,
rent price.
I have the
No, I
median
know,
rent
but
price
this is
already.
I'll go because the way I was gonna go about it with you, I was gonna reverse engineer it to
No,
find that
no, it's
number
not
for you.
fine because I want you to put yourself in the audience seat. So
Okay.
just tell me realistically how much you think you need to earn a year to live at least just stability, no comfort, basic stuff.
A
How
year?
much you need to earn to be able to
Well,
live in those
Fabrice, I
metropolitan
think
cities?
recently I read something and it says something around like 98,000 to be
I
comfortable.
I believe it. I
But you
believe
read
it.
it, so it's like it still defeats the purpose.
I mean, I would
But
say
yeah,
around that number, Val. I mean, yeah, if you're living in one of
yeah.
those
So
cities, close to 100,000 a year, probably 80
yeah,
80,000. I would say is the bare minimum, and
Guys,
that's
so yeah,
crazy.
so
That's
don't do
crazy
that,
because
because
guys.
80,000
Don't
is a
don't do
lot of money.
don't do
It's
that,
insane
guys.
amount of
Nah,
money for
nah.
for salary and
Guys,
everything. I mean,
let's not do that. Let's be realistic. I think
okay, so
for you to save Paris the echo, for you to
yeah,
say $80,000 or 100K or $90,000 a year, I think it's kind of insulting. Because how many people are actually able to make that living? But they're actually living, or maybe they are surviving. So I don't think
yeah,
if we want to give a number, I don't think it can just be a number. We have to break it down to age
exactly,
range. For example, a teenager, a college student, how much if you 20 between 20 and 28, a single, not married, and how much do you need? I think if you single, most likely you might be okay having a roommate. You might find a spot for 1,200 because 1,200 means the total. If it's just two of us, it's 2,400. You might find a nice spot for 2,400 in the city in any of those big cities that we're talking about. So for someone to be single and making 3,500 a month, I think that can get you around.
It can get you more than around.
Yeah, I think so. That's less than 50K a year. So now it's a matter of who you are in your circumstances and where you are in life. Now, if it's a couple, and it depends on your responsibilities and all that. If you're a couple, I think for a couple, you need, I don't know if you want to make it through household income, but I think you need way more, twice, even three times. I think for a couple to live comfortable, they need at least 150K. But if you're solo,
But
I think
it's one of those
50K
things
will
where
so
get you around in any of those
it's
cities.
one of
so
those things where it's
guys,
tricky
remember
because we're
I
gonna
asked
go
the
in
question first. So
comfortability. We're
so
talking about
okay,
comfortability.
before no, I wasn't talking about comfortability, to be honest. I was talking just because I did the numbers because I live in one of those big metropolitan cities, so I can
Atlanta,
relate.
Georgia,
And then
Atlanta.
I don't have to precise, but I can relate. But however, so 75K is actually just you get around. Like because after the taxes, after 18K of taxes, so you have 57,000 net. So which is about 45 4,567 if my math is correct. So you have it per month after taxes. So then when you are trying, it's either are you trying to have a roommate or you're not. So because there are couples having roommate. That's how bad the economy is right now. Some couples have roommate and
This
then
is
so
crazy. This
this
is crazy.
yes, depending on how many bedrooms is in the apartment. So
That's
it's like
crazy.
yeah, some
I'm sorry.
you can have two couples in the same apartment. So when we think about it, so the 50%, which is the essential, which is rent, transportation, etc. So it already eats up 3,500. So after that 3,500, based on your wants, based on your needs kind of it decreases. You have to think about it. So you have less needs, even if you want to eat out, etc. That is very good on paper. But after all the rent ate your budget, and then
The
so you
rent
just
ate your
have
budget.
to
I like that. The rent ate your budget. It's like the
yeah.
dog
So
ate
you
my
have to
homework.
adjust, and
But
then unfortunately sometimes they prioritize the needs instead of the savings and paying debt. So I think that's a mistake to not do. If you are low on budget, it's better to pay debt instead of having a dinner in a fancy restaurant. That's why I wanted
Got it.
to take
But
that.
Jonathan, I think. Wait, you had a question. One of the questions before that. Okay, so Franco said, I live in
That's
Austin.
yes, that's
I spend about 1,600 for rent plus utilities. Jesus, Franco, you might want to move. About 29 to 30K a year. I definitely could save more with a roommate, but I like my privacy as well. I mean, that's
Yeah,
it's where we
there's that.
remember when we were talking and you said we're not talking about comfort. I feel like this is a comfort thing, like
No, 600, 6,000 is a comfort thing.
because he could save more. He recognized that he could save more, or Franco could save more. Uh, So, but still decides I want my privacy. So how much is my privacy worth to me? My privacy is worth more than, like, I don't want to have to deal with a roommate or somebody else. So I will pay that extra. But that extra could have gone into savings, and I'm pretty sure that Franco knows that. But he still goes with that. And I think we had a question before that. It was an interesting question. Can you pull it up again?
yes. The question
Yeah, I
that
believe
we
it was
was,
about the small
what about,
cities
yes? What about the small
that are
affordable
getting more
cities that are
expensive with more
becoming,
people
yes?
moving.
So one thing that I want to mention, that's my understanding of things. It can be, you guys can have a different opinion of it. One thing that I realize myself is the cities that are big cities right now, or cities that maybe your parents, families, the old wave of immigrants they saw as, I would say, emerging cities. There were, those cities were at the time developing cities. They saw potentials in those cities, and then they move, because at those time, if we asking our elders right now, the house that they bought, the places where they rent and all that, those were actually more affordable at their time. They had an affordable, with their paycheck they were able to afford those, especially during the crisis and everything. Housing prices drop, they were able to afford those houses. But those cities right now, they are so crowded and so saturated that housing prices are so high, and people are not able to afford things in those cities. And that's what I think, also as the new generation, the new wave, what we should do is identify developing cities and states and move to those areas instead, because things are actually affordable in those areas. There are places in the United States, cities that are developing, having more infrastructures, and where things are actually affordable, and those are things, places that we should be searching for and see. For example, all the people, a lot of people moved to Texas and bought houses in Texas. They're
Yeah,
actually affordable,
houses are actually cheaper there, but
right?
it is.
We're not going into the how safe it is to be in those houses. Those are
Well,
another
that's another
topic.
question, but
But
it's
yeah, those are strategic plan. It's being able to see what you can afford and move in areas where you can have a comfortable life. Because I think we all want to have a paycheck and be able to live comfortably and spend that money and be happy, not having to live paycheck to paycheck. But if more than 50% of us are not able to do that, it's because we are doing something wrong, and we must address it.
but also, Jonathan, you said, so for the case of the smaller city or the affordable cities, like we always know or heard because of our parents or our immigrant community, we know the big staples: New York, Miami, Orlando, like the big cities. We've always known them. But like you said, there are some parts in the United States that there's opportunities. They're growing. I was watching the show the other day, the
North
Tulsa.
Carolina is growing.
Yeah.
North
So yeah.
Carolina,
So
Let us
be,
be serious, guys. No one wants to go live in North Carolina or those
but
areas
it's
that
Oh
because
Franco
we
is talking
no,
about.
Texas. Well,
Like,
somebody said
no,
let's
no,
Texas.
be real.
We
don't
got
don't
somebody
act
from
like that.
Texas
No,
hey,
here.
Fabrice.
but North Carolina is not going to stay North
With
Carolina.
the
It's developing.
percentage,
I don't know
if we
why. I
being
don't know
honest,
why
No
he's
one.
no,
got beef with North Carolina, but
no, no, guys. If we're being, and I agree 100% with Jonathan with that. If we're being technical, with the rate of growth of North Carolina, it's gonna be the best metropolitan area. Not even because North Carolina is like the way it's built, it's going in every direction. So it can even outpass like Florida in terms of financial district right now. So it's like because once the industries move, and we're not talking about factories, we're talking about actual industries for North Carolina. So it's a good
I mean,
staple to
North
think about it.
Carolina has a case, but what I would say, North Carolina has been expanding for years now, and as of right now, it still has not made it to where it's going to be.
Take
I mean,
time.
North Carolina has the case to become, like you said, a good metropolitan area. But other than that, there's not many other
It has
places
a
people are willing to move. Like, would
Phoenix,
someone move to Memphis,
Arizona,
Tennessee? I
Arizona.
mean, I'm not
it
sure.
has a
It's too hard for that. I mean, I'm Haitian, but it's too hard for that. Come
no.
on.
Like,
See,
would people
again,
be moving
again, that's
around the
some per
United States
part.
like that? I mean, I understand the big cities are too expensive, but at the same time, there are other areas. Like, we lived in Arkansas. Some of us lived in Arkansas, and we saw how
Ooh,
it was
you
there. It
lived in
was super
Arkansas.
cheap. It
Yo.
was. I mean, I lived in Arkansas. I'll say it. It was super cheap. We can say that. But in the whole state of Arkansas, there's probably one city that people would be willing to live in, and
But
that's
it's
not
not the
No,
same
no,
even.
for
no.
North
But
Carolina.
Fabrice,
There's
that
at
comment
least
that you
three
make.
cities coming together to do a big metropolitan area.
Hold
Yep.
up, Vadzini, but that comment that you made, Fabrice, that also answers one of the questions that we had because they said that in those lower, well, in those affordable cities, they pay you less, but
Exactly.
life has a way of balancing. So, in those cities where you get paid less, I'm pretty sure that the cost of living
But
there too
that's the thing with North
follows.
Carolina, salary is on par. Because that's the thing, when a city is going to be the next big thing. Salary is on par. If you're an investment banker in New
Yes.
York and an investment banker
Harrisburg.
in North Carolina,
Yep.
it's the same thing. Like, hey. And because when you say it after taxes, because no one in North Carolina is going to pay 33, 37 taxes. So
And
after that,
guys,
he's
But
going to
North
have the same
Carolina
net
is an
salary.
outlier.
guys,
It's
to
not.
not
It's not the rest
No,
of the
it's
country.
not,
guys,
Fabrice. It's not.
there's another part also. There's a total new state that is developing, but there are also cities, right, or counties near
Or
big city,
countries.
near cities. Hey, we're not going there. But yes,
We could move outside
you
of the U.S.
you can
I mean,
stay in New
Thailand,
York. You can stay in New York or in
And live in
Massachusetts
Piscataway.
and even yes, those are examples as well.
Yeah.
Like you can still live in cities that are not those big cities within those same states and have a better financial situation. And
that
Yeah.
to
makes sense.
to get back to what Sissy said about not getting paid a lot, one thing that I like to tell people, it's not about how much you get paid. It's more so
So much you
about
take
how
home.
much you saving, because you get it right now. You can have a salary of $60,000 and you only able to save $5,000 a year, but you can get a salary of $45,000 and be able to save $7,000 a year. There's a difference. You're able to
Yeah.
save more, so it's not always about how much you're able to you getting paid,
it's
but
gonna be
more so
more because
about
of your
how much,
strategy.
yes, how much you savings. So if
Go
you
live
getting
in
Yeah.
paid,
LA. Go live in LA and
If you
pay
live in
eight
LA,
dollar,
you don't save.
$8 tax, $8 gas.
In LA, 150K is like poverty. So it's like, hey,
So if I bring home 3,000 bi-weekly and I pay 1,600 in rent, how much do you save?
hey, I think
1600 in rent.
that
Which country? Which country is that
no,
Nah, but
I know where that person
per
lives.
week?
I know where that person lives.
I mean,
Oh,
1,600
okay.
for rent is
hey, yo,
about how much
that's
I
kind of
would pay
crazy. I know
where
where
I
that
am right
person lives.
now.
Is crazy. That's
Upstate
someone
New
Yeah,
said
York.
not
upstate.
Hey,
upstate New
so
York. Okay, yeah, that's true.
I think this is exactly where we bring to the next part of the show. We talk about why save and why it's a very important topic. So we're going to take a break and we'll see you on the next part where we discuss more about how much you should be saving and where you should be saving your money.
You
All
should
right.
probably
questions, and thank you for being very, very interactive. We are back. Yes, as we said, the next part is where we're going mostly talk about how you save and how much you should be saving, because apparently our audience, or some people are able to,
Skeptical?
not skeptical. Like, I think they've been able to get themselves around, But there's one question, guys, that I want to address before I move forward. Let me go ahead and share that question with you guys so you can see. That question is a very important question that I want you guys to answer. Right? Let me go ahead and do it out right now. All right. You should have it on the screen now. If you don't, if
With
so,
so many people,
yes, with so many people moving to North Carolina for opportunity, who is really benefiting from this growth? Is it the residents or outside investors and corporations?
interesting.
That's a very nice question.
Hmm.
So I think it's a bit of both because
I
the
think it's mutual.
investors, yes, it's because the investors they have the opportunity to extract the proper labor, especially because the move to North Carolina is a bit different. It's not a factory move as it was for Florida in the after the housing crisis. So it's about like smart people, like people with skilled labor. I don't like to call it skilled labor, but unfortunately, to be technical, I have to call it like this. So it's a bit of individuals well qualified that want to move to a state that's giving more opportunities, same salary as others, but less fiscal pressure. There are less taxes, there are less needs in terms of rent, utilities, all those good things we talked about, the 50%. So yes, this is the way I could answer that. So
Yeah, I mean, I think you said it well. Basically, it's both. I mean, the company pulling you, there's a reason they're pulling you, and it's probably because it's cheaper for them. So when it's cheaper for them, that means they make more profit. And in your perspective as a resident there, I mean, new opportunities. So I think it's a bit of like both of them are winning. We're not gonna say who's winning more, but yeah, both are winning.
Yeah, the way that I
But
see it is,
what I would say on that question, real quick, is that and when moving to a area like this, the residents usually don't always benefit because what tends to happen is that with new people, with immigrants coming in into area, if there's not new houses built, the price of housing will go up, rent will be going up, and to counterbalance that, you can say, so the big corporation will just make sure that there's enough housings available. So that is a good point. But the problem with that, with new houses being built, it's new material, new furniture and everything. These houses don't tend to go for cheap, so it would be more expensive than normal housing. So I like the way you guys answered that question. It's like, yeah, both can definitely benefit. I agree. I think both resident and corporation can benefit. I think that's probably what's going on right now in North Carolina. That's why there's this mass influx of people moving there. But I want us to also be conscious that with a lot of people moving there, the initial resident, the true North Carolina people, they're probably gonna get impacted by seeing their houses being more expensive than usual. I mean, someone from New York is moving to North Carolina, they'll find the rent cheaper than New York. But that same guy from North Carolina living will find his rent going up, although it's cheaper than the rent that it's for New York. So everyone moving from New York will find it cheaper. So maybe the residents are not entirely winning, but I'm pretty sure there are benefits because they'll have that's more jobs that are gonna be creating in this area. So I believe it balances itself in the long run, maybe.
I
Ceteris
mean,
before,
there's
so the way that I, one aspect of it as well, if we're talking about, there's also an increase in value, because if I were just renting, not owning anything in that state, I might not benefit as much. But if I've lived there and I own, could be businesses, could be houses, or anything that I actually own over there, their value is going to increase. For someone who bought a land or anywhere in North Carolina a couple years ago or a decade ago, and now those places or whatever that asset was, its value is going, it's definitely increasing at a pace that maybe that person was not even anticipating. So I think it varies. It depends of who you are and what type of assets you had over there, or if you had any assets. But I think if you were holding any asset in that area, it's definitely an increase in value and a win for you.
Before we finish that, because I wanted to add also, because we had the same situation during the pandemic with the what we call the tech bros, because most of them moved in South Florida. So because before, let's say we take Brickell district, so okay, the price the rent was before that move, it was very cheap. However, as supply and demand works, so it got so expensive that no one could have been able to afford Brickell for that same penthouse view. And then, to be honest, because it if I'm not mistaken, I think in 2020 I was there. So couple of one bedroom was about 2200, which is relatively cheap for that same view, that same let's say by the sea, by the water. In New York, it would have been 4,500, 5,000. So, but the people living there were like, so okay, so all those people, they're gonna come there, they're gonna raise our rent, and then so boom, and then that's exactly what happened. So no one can afford South Florida anymore. Like no one. I mean, except if you have a lot of money, but no basic income earner can afford South Florida.
So if I can't afford Florida, I'm basic.
You cannot
Hey,
afford it. So
Jesus
so
Christ.
now I
He went
think
so hard with
I
it.
think what everybody is asking is how can we save and what should be the stress, some saving strategies. So I let you guys take the lead on that and let's lead them right into it, guys.
I mean, the
I
one
mean,
of
I
the
alluded that a little bit at the start. The policy of paying yourself first. I'm not gonna dwell too much on it. I'll let Eva. I think he has a
well,
point he wants to
yeah,
drive in.
because you're gonna go into paying yourself, which covers
Yeah.
the different saving strategies. Um, I have a little background in banking, so one of the things that we can do is, and when I say invest, just open savings accounts. But you have to know what saving accounts you're opening. Um, the information is out there. Like I said, we're not financial advisors, so and we're not doing free promo. So I'm not gonna recommend, oh, this is better than this or this and that. But you have to know the terms of what you're agreeing to or you're opening a savings. Um, let's say a popular bank that most people have, it's offering 0.01%. So basically, like you have to know like APY. What does it really mean? So it's giving 3% annually. Like you're basically earning peanuts, really, because it's over the course of the year. You're gonna get 3% back on the amount that you have. So it starts to make more sense if the more that you have on it. But let's say that for the average American that always struggles with that can struggle with that $1,000 emergency fund, really, if you put $1,000, really at the end of the year, get like 3% on that. Like, what's that? Like, I'm not doing the mental math real quick, but like that's 3% on it. So like $30 to $40 with like a 4%, 3%, 4%. You're making peanuts to that. There are other investment accounts or um, I think it's the traditional investment accounts. Those are more risky. They offer a higher yield or the APY. So if you're risk adverse, you might not want to go down that route. Sorry, because as it is risky, yes, the rewards exponential, but also you have to understand that you might not make money. So as long as you understand what you're really entailing yourself into, like are you engaging yourself into, then you'll be fine. But you have to know what savings and this is one of the things that I see a lot with our community. Sometimes I have this conversation with some people that are close to me, like, hey, do you know how much saving account is offering, most people, you'd be surprised. Most people either don't care or don't know. Um, I can use. I don't want to put her on the spot, but I'm using my sister. I asked her. I had a conversation with her. Like,
You're putting her on the spot right there.
So you
she'll
didn't want
You
to
kind of
put her on
already
the
did.
spot, but you
And
did.
she'll live.
I can guarantee you, I will make sure I repost that part. Go ahead, Eva, and say
she'll
it.
she
Yeah,
she'll live. She'll live. But yeah, like I'm not gonna say like exactly what happened, but it's like okay, do you know how much your saving account is offering? Do you know that if there's better out there? It's like so that conversation went there. It's
With
like
your
okay,
sister, right?
yeah,
Okay.
something like that.
Okay.
So that the conversation went there. I'm not saying what the outcome was. Shout out to baby sis, but yeah, most people don't know really like what savings they're putting themselves on. So me with the banking system, like I'm familiar with the the savings account, the CDs, and the investment part. I don't know if you guys had any other forms. I know
yes.
we had a show recently on Susu, so I don't know
Uh,
if
yeah, no,
that's
me,
your
what
preferred
I was,
method.
I'm not sure if because a lot of congratulations for Jonathan because he's putting all of those visuals while we were talking. So what I was gonna say, it's like choose the saving method that works for you, because after the 50, 30, and 20, there's like the you can count every dollar, like the new dollar method, as we like to call it. It's another way to save. Like you make
Zero
sure that
dollar method.
thank you so much, Fabrice. See you that day, that
Should
guy.
call it
So
the
the
non-profit method.
so the $0 method. So you make sure that there's no dollar that's not accounted for, and then you have the envelope method, which for people that have very difficulties keeping track of their money, they can use it because they put this amount of money in their separate envelopes. So let's say I have that certain goal coming on, so I don't trust myself, so I can literally use it. But in it depends of how you are. Are you very organized, or are you tech savvy? Because for me, that works. I'm gonna share for that. I'm gonna share my personal experience. I just have to do an Excel sheet and track my spending. That's how I do it, and it works for me. But for other people, and then it's okay also if you miss a month. Like let's say that you had big car bills, let's say that you had certain emergency, because life comes at you fast. So we're not asking everyone to be so proactive about it. However, because you failed in April, that doesn't mean you have to fail in May, etc. So you still have to stay on track, on budget, because because it's a life decision, and you have to choose monthly or weekly, depending on how you set your budget, to choose the right decision to spend effectively based on what you earn and what you spend.
So,
I,
So
I
I
don't want to. I
wanted to
don't
take it
before
away
before
and do a
before we go
quick.
any further. I don't want to make Jonathan blush with that, but that feature where we see the questions, definitely a good thing. I
Uh,
mean, it. I think we had a question that said, "How does a high yield?" Come on, you're doing too much.
you know
You're
we
doing
do.
too much. How does a high yield work? A high yield account really work? A savings account work? So basically, it varies from different banks. Really, every bank has their own set of rules. Sometimes you have a certain limit. When I say limit, a certain amount to start it with, um, and you have a certain amount to keep. So every bank is different, but what is common between it is that it stays at a certain rate. For usually they try to fix it as the Fed takes their decision, so it varies then, but it gives you that interest divided. So basically, if it's 4.5 um, percent a year, take 4.5 and you divide it by 12. It gives you the monthly that it compound the monthly interest rate that compounds. So 4.5 divided by 12 gives you an amount that you multiply it by the amount that you have every month, and it compounds.
Fabrice, you there?
Uh,
Yeah, so it compounds.
so Eva, let's see if I can go ahead and explain that explain that for the audience.
Yeah, I think I went a bit technical, didn't I?
Yes, I know it's your field. You know, sometimes we tend to
Yeah,
be more technical than that. So,
yeah.
uh, let me try to break it down for you. What does it mean, a high yield savings account, for people who don't know? You see, when you have your own credit card and you pay interest on your credit card bills, and there's a percentage on that, you pay interest. It's the same thing with when you have a high yield savings account. It's like the bank pays you interest for the amount of money that you have on the account. For example, if you use just a regular bank, I am not going to put names, but you guys already know which are the big banks. If those are the banks that you use and you open a savings account on those banks, you most likely not going to earn any interest on those accounts. Your typical bank account, the yield might be 0.01, which means if you put $10,000 on your savings account, you're only going to earn $1 on that account every year. Okay, so the money is definitely losing value. Whereas there are actually other savings account, or what we call high yield savings account out there, where if you put that $10,000, it's going to earn $450 on interest. So you simply put $10,000 there, and after a year, when you go back, you have 10,450. That just to only give you the example. And you might be asking yourself, what are those banks? Why I have never heard. Exactly, it rewards you for your saving, and you might be asking yourself, why did I never hear about those banks? We have couple there, right there, that right after this call you can go ahead and verify those. We have Goldman Sachs, right? The APY is about 4.5%. We have Ali Bank, we have SoFi Bank, we have Capital One 360, depending on one of them, 4.3 on the high yield savings account, which means if you open a savings account with them, and whatever the amount of money that you put there, and you check what is the high yield, what is the APY, most likely you're going to earn 4.5 to 4.3, and in some cases even 4.6. So your money is actually making more money without making any effort. Basically, that's what we're telling you, and that's why you should, instead of having a savings on you with your regular bank, to have a savings with those accounts, because those are uh there to be savings. Your typical bank is more to be a credit, to be a debit, to do transaction, but those accounts are there for savings, and that's why they pay you when you put your money there. And there will also be regulations. With your typical bank, when you put your money, you can take it tomorrow. You have in that savings account, you take the money tomorrow. You can take as much as you want from that same savings. So is it really savings if you can put it today and take it out tomorrow? That's not how you should be saving.
For example, when you talk about saving, there's one saving options. It's called certificate of deposit, and it's possible sometimes to have it liquid. So one of the things about liquid, let's say that it's usually at a lower rate, so it won't be like at a 4.5. And the 4.5 is when the economy is doing really well, by the way, and the Fed doesn't drop rates. I don't think it's at 4 point right now. I think it's more around the 3 points.
Yeah, that's why
But
the
for the
data is
purpose,
saying
yeah,
it's
for the
2024.
yeah, for the purpose of more conversation, we wanted to show these. But the CD, the liquid CD, let's say that you put 50,000 at 4%, it earns that 4%. But with the liquid CD, you can withdraw every 7 days you can withdraw. So let's say like today, or Wednesday, you withdraw 5,000 from the CD, right? You still earn money on the 45 that remains, and you can only retake money from that account like 7 days afterwards, so next Wednesday. So it's one of those things when we were talking about Susu and Sol, and I was like, okay, there's that saving accounts that exists, but most people don't know that, so they don't want to touch it unless there's a big emergency, but it's still earning money to some extent. So it's even more drastic than a saving. It's like think about it as the saving account plus.
So the other part is to explain to people how they should actually save. So you cannot just be putting money away for no reason. If you're saving, you must have a purpose, and we can give you multiple purpose. One of them is the first goal should be to at least have the bare minimum 1 month of monthly expenses. So for the one who said they spend about 1,600 in both rent and utilities, your savings account should be bare minimum. That's the least, at least 1 month of your expenses. Which means if things were to go south, you at least have a savings account where you can at least sustain your expenses for a month. Now you can also push it to 3 months, which will be 7,500. And it's hard to get there, but some people do get there. So if you're able to have some you're not living paycheck to paycheck, you're able to have some spare change. That's what you do. You throw them into what we call the high yield savings account, where that money alone is going to grow, but also you keeping that savings for you building an emergency fund. And if you can push it even further, the best one to do, that's why it's green, is to have 6 months of your living expenses. So the ideal target is you should have at least 15,000 in your savings, and that's okay. That's not having too much. If you be able to get that amount of money in your savings, you're not going to make reckless decisions, because at least you know you have a place to get some money if things were to go south. Those are why you should save and how you should save. Now, it takes a while to get there. That's why some people start with, we have $700 a month for a year. After a year, you at least get 8,400 in your savings, and that still puts you in that exactly middle bracket where you at least have money for your expenses, for your cost of living for at least 3 months. And if you can start right now, if you don't have a saving yet, if you can find a way to save at least $700 a month in one of those savings account, then you will be able to, in a space of 1 year, to accumulate about $8,400 in savings for your living expenses. And if you can grow it, that's even better. But to do that, as Fabrice said, the first step is always try to pay yourself first. Send the money to your savings before you pay your bills. Now, to do that, you need to know how much your bills are. And to be able to do that, your bills need to be less than your income. So there are a lot of things that you need to do to make sure that you are respecting all those steps to be able to get there. And
I have a
if
question.
before we and if that sounds very difficult for you, one thing that we want to say is those are exactly why economy exists. We do assist our community in financial coaching and do financial budgeting, because sometimes it is difficult to be able to do that on your own. To the numbers might be a lot for you sometimes, and we do offer those services as financial coaches, where we provide that service. We do explain to you how you can actually do those budget, how you can actually better your financial life. Not only we do it through the podcast, we offer the service one on one to do it to the financial coaching. And we also have
basically.
one of our event coming up, which will be a financial workshop where you can come in person, meet us, ask those questions, and we also will be able to assist you to making those steps for free, basically.
Boom, boom, boom.
Yeah, I had a question. So is that how we become rich? Like by saving in a high yield savings account? Is that how the rich people
Um,
do it?
no,
No.
Oh,
definitely not.
oh, I
But
thought we were onto
it's a
something here.
step.
I thought we
It's a
were onto
step.
something. I'm
So
sorry.
think about it as that. Think about it as a step for the next step, for lack of better words. So the savings, you see where Dan showed you that
The
little thing that
graph,
says, yeah, that little
the
Yes.
graph
bar
that says
graph.
15,000. When you're at 15,000, if you lose your job or if you have any upcoming expenses that come in, like you
Yes,
buy
you have a
yourself,
proper caution.
yeah, you buy yourself a cushion. So eventually you want to build that, but the next step is really like investing your money. I think I alluded to it at the start of the show. Really, when you have to
Did you?
invest your money, like it was vague, but that's another topic.
Mm.
Like investment
It's
accounts.
another
That's a whole
topic for another what if.
right. So it was like next time.
So
But yeah,
basically, investing is how you become rich, not saving.
investing multiple source of
Fabrice, you already
income.
rich. Why are you asking those questions?
Oh
Yeah,
my
Oh,
god.
yo,
Hey
I be like,
yo.
why is he asking the question?
if I'm rich, no economy is rich.
Fabrice, can you pay my rent?
Oh
Are you
no,
gonna
that's
say
like
please?
charity. It's different. It's
Oh,
charity.
Are you gonna
I have,
say please,
I
Ivan?
have to
Anyways,
say please. My
so
apologies.
guys, we already. Anyway, so
I mean, time
I
passes
like
when we're having fun. Let's say that, right?
I, yes, point to Jonathan again for just explaining and making it easier for our audience and us as well to understand better the importance of savings. And then very interesting point for the workshop, because for the workshop in Jersey, we will be there and we will be um let's say discussing the financial health for anyone interested. It's anyone in the New Jersey and New York area. That's where we're gonna be all for.
If you're in
So
another state too
And
and you want to come in,
hey,
please.
drive in. But we have
yes,
to
it is
mention that
welcome for
this is
anyone.
the first one. It's going to be in Jersey City, but we're coming to your city for sure. So just stay
Yes,
tuned.
You can ask for us and we'll be
wherever
there.
you live, there's a workshop near you coming soon. All
Boom,
Mm,
right.
boom, boom.
So
hey, I don't know about that, but okay.
Do you have a visual for it
I
then?
said near you. I didn't say how near it is, but near you
Do you have a
to
visual
some
for
point
the show?
If I have a visual for the show, no, I don't.
No, for the show, not for the event.
for the
Like,
workshop you met.
For the
I mean,
workshop.
Oh, it's
they're
fine. So
available on our platform, so
anyone can
I'm
follow
inviting.
us and then
Yeah,
share it.
I'm
And so
inviting
it's
our
gonna be very
audience.
interesting because those discussions they are very important to have, because even us that are technically in the let's say that's what we studied, but we still learn every day and every time. And then it's very personal for us to do it. We don't do it just to be there every Wednesday. We just do it because it is meaningful for us to help the community as best as we can and to learn from the community as well based on those questions. And then you guys have been very great today. I want to congratulate everyone and then to be grateful for it. So yes, I will leave you with my colleagues, but this is what I wanted to say, and I'm very proud of how far we came and how we managed to do, because it is our first show, not the last, definitely in English. So thank you.
Well, I want to say it's the first live show in English, but sure. You said that we're doing this to help. Oh, so we're doing this to help people. I didn't know that part. But yeah, basically, it's good that we come here and we talk to each other, and we bounce those ideas. And our goal ultimately is to help our community because we know what it's like to be in an underserved community. And with those topics, with those discussions, workshops, and the services that we provide, we hope to come up with solutions for those communities. So thank you for everybody that's there. I know Fabrice. I know that look, Fabrice. You don't have to say it. So I'm going to leave the floor for Fabrice before you say something.
Not at all, even misunderstanding of my smile. I'm just so happy to have spent this wonderful time with our audience again. Like we said, this is our first, definitely not our last show in English. Look out for our next show next week. I'll say it. It's in Spanish. So if we're not speaking Spanish, I don't know.
Olay.
Yeah,
Hablo
definitely.
español, pero puedo ayudar.
Oh,
Que tú
wow, wow.
necesitas ahora? Una
So be
budget?
careful, be careful. Cuidado, cuidado con nosotros, porque
Oh my
Ah,
God.
mi
Hey,
español
a
está
la
medio.
Madrid y nada más.
I love
okay,
it.
Oh,
okay, okay, okay.
Visca
Ok,
Barça.
Madrid
Oh,
perdu hier en tout cas.
well,
So that's
So
Visca
all I'll say.
Barça.
Barca won today. My bad.
no,
Oh,
Barcelona
oh
habla
wow.
Cataluña, está diferente, pero ya.
Oh
Yeah,
yeah.
Donc, ouais, ben, we're waiting for everyone to be there in Jersey, April 25th. Mark it on your calendar. You don't need to be from New York. You don't need to be from New Jersey. I know the love is here. So I've seen people in the chat saying they're from Austin. I mean, hey, Austin to Jersey, I know it might be a drive, it might be a flight, but we will appreciate that
Try.
very, very
I
much.
drive is.
So if it's not possible, it's fine. We understand, but that would mean the world to us to be able to see you guys in
I'm sorry,
person
Fabi. So we
and
have
be able
people
to.
complaining about the cost of living, and you want them to drive from Austin to
Hey,
Jersey?
let me talk to my audience. You had your time. Let me have my time. Okay,
Ooh.
so
Ooh, ooh.
we're
Okay,
waiting
Skip.
on
Okay,
everyone.
Skip.
So impatient. Can't wait to show you guys what we have prepared for you. And this is just the beginning. We'll be here all the time, every Wednesday, and we'll be like just like Vadzini said, in a city near you very very soon. So hopefully we get to meet everyone.
Next time in Spanish.
I'll let my colleague Valtini take it away before I finish. If you guys don't have
Oh, okay.
anything else to say.
Yeah, I mean, I think that was about it because, to be honest, guys, the energy, I felt it, you know.
Okay,
Today was very
Mr.
He's the
amazing.
energy
Vibes.
guru. I told you guys
I
that.
think next time we need to have those little,
No,
Hey,
nicknames
because
next to the name, Mr.
it's
Vibes.
very nice because those conversations when you see people show up and then they take the because it's their time. It's really 9:03 p.m. I mean in Eastern time, so for others in different time
might be
zones.
6
So
p.m. for some people right now.
I know he said he's not
exactly.
disclosing where
Might
he
be 8
lives.
for some people. You
I
never
know he
know.
said he's not disclosing where he lives,
I
but
mean it's a whole time
l-
zone.
look at the material.
Where I
Look
am
at the
right now, it's
material.
6 p.m. Where I am
So
right
I
now.
mean I know some people from Spain listening to us right now. Shout out to them. So yeah, let's go.
So
Gracias.
before one, I wanted to leave you guys, for those who came and listened and followed the show today. I wanted to leave you with some practical steps. And you might be wondering, you want to start a budget, but you might not know how to start. And I'm going to give you the steps. Those are tools that you can use as of today. And we have You Need a Budget app. It's $15 a month. You might not want to go there. We have Every Dollar. It's a very good app as well. It has some limited options when it for the free version of it. You can try that. If you like it, you
I've
might
used it. It's very good.
yes, and you can use Credit Karma. Credit Karma also is not that bad. Or you can have some Google Sheets. And the last options that we have, if you're listening to the show today and you're interested, you get a free you get a free sheet, budget sheet from Economy. So if you're interested in that aspect, right after the show, you can DM us or reach out on any of those platforms that you are watching right now. You can just say, I was watching the show today and I want my free budgeting tool or budget Excel sheet. We will be able to accommodate it to your needs, create it and send it to you, and you can write in there, start budget your life to have a better financial life. So I wanted to mention that as one option that we have. And also, if you already have those tools or you don't want a budget, what you can do starting right now, you can start calculate your after tax monthly income. That's important. You review the last 30 days of your bank statement to find any to maybe have an idea of your expenses. And you can also start by opening a high yield savings account this week. Those are the practical steps that Economy wanted to leave you with. It was a pleasure to be on the live with you today. The show is ending, but the conversations never and will never stop, and they will continue on all our
Won't
social
stop, can't
media
stop.
accounts. It was a pleasure. See you next week around that same time, a little bit earlier, 7:30 p.m. Eastern time for another show. It was Economy, a pleasure. See you next week.
See
Bye.
ya.